What if I told you that by tomorrow morning, two currencies could shake the global financial system and completely change the way investors look at money? That's not a fantasy or rumor. It's a developing reality. The Vietnamese Dong ND and the Iraqi Dinar's IQD are now at the center of what many analysts are calling the currency event of the century. These aren't small players anymore. Economic forces, government reforms, and global market shifts are all aligning in a way we haven't seen in decades. The projections floating around are shocking. The dong could hit 2.60 per unit, while the dinar could soar toward 4.92. For ordinary people, that kind of move could mean life-changing gains. But what's real, what's speculation, and what's about to happen next? Stay with us till the end, because today we're breaking down the full truth behind this potential financial explosion that could happen as soon as tomorrow. Let's start with the Vietnamese dong, a currency that's been quietly preparing for this moment for years. Vietnam's economy has transformed from a low-cost manufacturing base into one of Asia's fastest-growing innovation centers. Over the past 5 years, the country's GDP has averaged over 6.5% growth, even while global economies struggled. But here's the part most people overlook. Vietnam's manufacturing sector has skyrocketed by nearly 400% since 2020. Major global brands like Apple, Samsung, and Nike have moved their operations there, not just for cheap labor, but for advanced manufacturing and stability. That's a huge shift in economic power. Behind the scenes, the State Bank of Vietnam has been increasing its foreign reserves, now estimated at over 100 billion, up 300% from 5 years ago. This gives the government control, stability, and leverage. When a nation strengthens its reserves and infrastructure like this, currency appreciation often follows naturally and quickly. Vietnam's transformation isn't just economic, it's strategic. The government recently launched a 50 billion national infrastructure plan targeting new high-speed rail systems, digital smart cities, and modernized ports to boost exports. These aren't small construction projects, they're long-term growth accelerators designed to make Vietnam a central hub of Asian commerce. Analysts say this is similar to what China did 2 decades ago before the yuan gained massive international strength. In addition, Vietnam's close relationships with international institutions like the World Bank have led to billions in development funding, strengthening its credibility in global partnerships. Combine that with rising foreign investments, and you have the foundation for a major currency revaluation. Investors worldwide are watching the Vietnamese dong closely, and many believe we're entering the early stages of something extraordinary, a massive currency correction that could reprice the dong dramatically against the US dollar. Now, let's shift our attention to Iraq, a country whose economic potential has been hidden beneath years of reconstruction and recovery. But what's happening now is unlike anything Iraq has seen in modern times. The Iraqi dinar, long considered undervalued, is showing signs of strength, reform, and growing international confidence. Iraq possesses the 5th largest proven oil reserves in the world. That's roughly 145 billion barrels, representing trillions of dollars in potential wealth. Recently, Iraq signed multi-decade oil export agreements with China and India, ensuring stable and high-value exports for the next 20 years. These deals mean a steady inflow of foreign capital, and historically, when countries secure long-term commodity contracts, their currencies strengthen significantly. What's different this time is that Iraq isn't just relying on oil, it's now taking real steps to modernize its monetary system. The Central Bank of Iraq has quietly implemented reforms that most global investors aren't even aware of yet. Inflation has been cut from 15% down to just 3% within the last 18 months, a monumental improvement that signals economic discipline and stronger monetary control. The government has also paid off over 40% of its foreign debt in the past 2 years. Lower debt means more credit stability, which attracts international investors and strengthens the dinar's value. But perhaps the biggest development is Iraq's growing relationship with institutions like the International Monetary Fund, IMF, which has been advising Iraq on modern monetary policies. Whenever the IMF supports a nation's financial reform, confidence grows in its currency. Iraq is following a clear blueprint: stabilization, diversification, and international cooperation, the same path that historically precedes massive currency appreciation events. You might be asking, why are these changes so important right now? Because timing in global economics is everything. Both Vietnam and Iraq are benefiting from a unique window in global trade realignment. Major economies are moving manufacturing and energy partnerships away from traditional centers and into new, emerging regions. Southeast Asia is becoming the new manufacturing heart of the world, and the Middle East is turning into a diversified economic hub beyond oil. This shift creates ripple effects in currency markets, and both the dong and dinar are standing right in that current. Institutional investors, hedge funds, sovereign funds, and currency trading firms are beginning to accumulate positions in both currencies. History has shown us that when institutional players start buying, it's usually because they've seen something the public hasn't. Data, forecasts, or policy moves that point toward a major financial transformation. Let's break down some numbers that paint a clearer picture. Vietnam's GDP is projected to grow by 7.2% this year, making it one of the top performing economies in Asia. Their export revenue has jumped by 35% in the last 12 months, which means more foreign currency is flowing into the country, and that's one of the most powerful forces in currency appreciation. Iraq, on the other hand, has increased oil production by 25% to improved security and new extraction technology. Each new oil shipment brings billions in foreign reserves, strengthening the dinar's backing. These are not speculative figures. They're real-world numbers showing tangible progress. When both nations are simultaneously reducing debt, expanding exports, and attracting global partnerships, it signals a perfect economic alignment, the kind that often precedes a major revaluation event. But let's not forget, currency explosions don't happen overnight without warning. There are usually quiet signals that appear first. For example, both the Vietnamese dong and Iraqi dinar have shown strong technical patterns on long-term trading charts. The dong has broken multiple resistance levels that held steady for nearly a decade, while the dinar has been gradually climbing against other major currencies in regional markets. These are early indicators of confidence, traders positioning themselves before a larger move. Analysts point out that these currencies are forming what's called a bullish breakout pattern. Once that breakout completes, sharp upward movements can occur in days or even hours. It's like a coiled spring, silent for years, but ready to release powerful energy when economic pressure finally aligns. To understand how fast these moves can happen, we only need to look at history. In 2015, the Swiss franc jumped 2% in a single day after a surprise announcement from its central bank. During the Brexit decision, the British pound experienced one of the most dramatic overnight shifts in modern currency history. These examples show that currency markets move in bursts, sudden explosive moments, when policy, speculation, and global reaction collide. The question now is whether the Vietnamese dong and Iraqi dinar are approaching their own breakout moment. Many experts believe they are, and the evidence is building faster than ever. Both countries are implementing strong reforms, cutting debts, expanding industries, and boosting exports, the exact recipe for a revaluation event. Vietnam's story is not just about growth, it's about transformation. From a developing economy to a regional powerhouse, the nation has completely redefined itself. Technology parks, smart cities, and AI-driven manufacturing are no longer dreams, they're operational realities. The country's leadership understands that in the 21st century, digital strength equals economic strength. By focusing on digital banking, blockchain integration, and smart trade systems, Vietnam is building a future-ready economy. Every time a developing country achieves this level of modernization, it sends a clear signal to investors: we're open, stable, and ready for major financial expansion. That confidence alone can drive a currency higher as global investors race to get in before the appreciation wave begins. Iraq's progress might surprise many, who still associate the country with instability, but a new economic reality is emerging there. Baghdad and Basra are now seeing massive construction projects. New airports, highways, and power plants are reshaping the nation's infrastructure. International corporations are quietly investing in telecommunications, agriculture, and renewable energy. Iraq's vision is clear: diversify beyond oil and create a self-sustaining economy. When a nation with one of the world's richest natural resource bases diversifies, the result is almost always a stronger currency foundation. The Iraqi government knows this. They've even taken steps to modernize banking systems, integrate international payment networks, and attract foreign capital directly. These are not the actions of a stagnant economy. They're the signs of a nation preparing for a financial comeback. It's worth noting that global investors are watching these developments closely. Large investment funds are reportedly adding exposure to Vietnamese and Iraqi assets as part of their emerging markets portfolios. When major funds diversify into specific countries, it's rarely by accident. It usually reflects confidence based on data, insider analysis, and policy insights, and once institutional capital begins to flow in, smaller investors often follow, amplifying demand and driving up value. This ripple effect can transform slow markets into global players almost overnight. It's happened before with countries like Singapore, South Korea, and even China during their early development stages. The same forces now seem to be aligning for Vietnam and Iraq. The potential upside, if these revaluations occur, is enormous. If the Vietnamese dong truly reaches 2.60 per unit, early holders could see returns that redefine generational wealth. The Iraqi dinar, projected by some analysts to approach 4.92, could deliver one of the biggest appreciation events in modern economic history. These numbers sound extraordinary, but when compared to the economic groundwork being laid, they're not impossible. Both countries are expanding exports, strengthening reserves, and integrating with global systems. Historically, these conditions have always led to stronger currencies, sometimes drastically stronger. Of course, no financial story is complete without risk. Currency markets are volatile, and while fundamentals are strong, external factors, global conflict, policy changes, or sudden market shocks can shift outcomes. That's why experts emphasize the importance of doing thorough research and consulting with professionals before investing in any foreign currency. However, even with risks, the momentum behind both the dong and dinar is undeniable. For many investors, this isn't about short-term trading, it's about positioning early in what could be a multi-year revaluation wave. As we look deeper into global trends, we can see another layer of this story: the power shift in global finance. The world is gradually moving away from dependency on a few dominant economies. Emerging nations like Vietnam and Iraq are showing that financial power can be built through discipline, innovation, and global cooperation. The more they modernize their systems and prove economic independence, the more the world begins to trust their currencies. Trust, after all, is the foundation of currency value. Without it, paper is just paper. But when nations earn that trust through results, markets respond. And that's exactly what we're witnessing right now. For everyday people watching this, the question is simple: how do I prepare? The answer depends on understanding trends, not chasing headlines. Watch how governments act, how institutions invest, and how policy reforms unfold. Those moves tell you where the future is headed. If these projections for the dong and dinar continue to gain traction, the ripple effects could extend far beyond Vietnam and Iraq, influencing global trade, commodity markets, and even regional currencies. The next few months could be some of the most critical in modern currency history. It's rare to see two separate nations from completely different regions converging toward potential revaluation at the same time, but that's what makes this story so powerful. Vietnam's digital rise and Iraq's reconstruction boom are creating parallel momentum. Together, they're redefining how smaller economies can rewrite their futures through smart planning and international collaboration. If the projections are accurate, both currencies could enter new valuations within a very short window, maybe weeks, maybe months. That's why staying informed, updated, and ready is more important than ever. So, as of today, In 2025, the question remains, are we on the edge of a currency explosion? All signs suggest we might be. The Vietnamese dong and Iraqi dinar are no longer underdogs. They're emerging forces backed by real reforms, growing economies, and rising global confidence. Whether they reach 260 in 42 or simply climb significantly, the direction seems clear, upward. The smart move now is awareness, education, and preparation. If you found this update helpful, make sure to like, share, and subscribe to Iraqi Dinar News, where we bring you clear, credible, and engaging updates on global currency developments every week. Stay tuned, because tomorrow could mark the beginning of a brand new financial era.